Welcome back, ladies and gentlemen. So in today's video, I want to talk about the bullish order block because a lot of you requested a video about the order blocks, and now I decided to structure it in two ways, whereby I'll be talking about the bullish order block on its own and also the bearish order block on its own, so that you may be able to get the difference in a better manner. If you've not subscribed to the YouTube channel, consider subscribing, and if this video will be insightful at the end of it, consider giving it a thumbs up. Now, bullish order block. It is the lowest bearish candle that has the most range between open to close, and it is near a support level. Now, in as much as it is a bullish order block, and here you can see that the definition we are considering the bearish candle, yes, it is the lowest. It must be the lowest bearish candle that has the most range between open to close, and it is near a support level. What do I mean by the most range? It means that the body is quite conspicuous and big enough. Now consider this one as our bearish candle, and I want to use a better color. Let me use red. Let me fill it with red. Now, at least our bullish order block must be the last and the lowest. It should be the lowest bearish candle. This is our bearish candle, and it is supposed to be suited near a support level, for it to qualify as a bullish order block. I know you are getting the confusion. It's a bearish candle, and how does it qualify to be a bullish order block? Yes, it is the bearish candle. The essence of this order block is just orders being placed at these candles or blocks. The institutional order, so they do it in a way that you can't realize in a better manner. You can't realize whenever they come to mitigate the orders. Now, it is the last and the lowest bearish candle that has the most range. At least the most range, I mean the body of the candle must be conspicuous and at least be bigger enough for it to qualify as a bearish or a candle, which is the bullish order block. And it is suited or should be based near a support level, at least to qualify for a better order block. Now, you're wondering why order block, so the bullish order block for this particular case, because this video was meant to be about the bullish order block. Now, this bullish order blocks is at least an institutional candle whereby they do place their orders, and they always come at a later date to try to mitigate the order so that you cannot feel their moves. But once you know the footprint and whatever the institutions are trying to do, you can ride the move with them. So having a greater understanding of whatever the bullish order block entails will try to give you a better understanding of the institutions, whatever the institutions are trying to do in the marketplace, and you can try to drive with the move. You can ride with the trend with them. Now, the best bullish order block for this particular example at least must cause a sharp run in price. Whenever price trades away from it, there must be at least some high momentum, and actually it should cause break in structure, whereby maybe this short-term high to be taken out for the ease. It is known as break in structure, but you'll be able to see for this particular example, it should at least cause sharp run in price. At least price should trade away from the bullish order block with some sort of momentum, high momentum. And also the best bullish order block should cause break in structure to the upside. For this particular case, we're talking about the bullish order block, so keep in mind. And also it should be suited or based near a support level. Now look at this example. This line that I've delineated at this particular level is our support level, and let us see how the market will be trading near a support level. Let me use the replay button. Now the market is trading to the downside. Let us see if it will take or if it will bounce off near a support level. Now the market has reached to our support level. We don't enter, at least we must see the formation and fold. Now the market is trending to the upside. It has broken this structure. Whenever this structure has been broken, at least it signals that we should be based on the buy side of it. Now, look at this support level that was created initially. This is our order block, this one. This one. The lowest bearish candle, this one, that has the most range between open to close. The body is conspicuous and big enough, and is near a support level. This is our support level. So what do? You mark the whole of the order block. You can mark the whole of the order block because you're anticipating price to trade into it. Now, most of the times, this order block, you're anticipating price not to violate it, you see. And I'll do another video on how to enter best and the refinements of this order block at a later video. But let me now give you the light watch of what the bullish order block entails, and the next video will be about the bearish order block, so that you can be able to get the difference quite clearly. Now, the lowest bearish candle that has the most range between open to close and is near a support level. This is our bullish order block. It has the most range and is suited near our support level. And I said the best one, at least you should see price trade away from it with high momentum, and it should break structure. It broke this short-term high. So what do? You wait for price to reach into this order block whereby you should be taking your buys from. The stop loss should be slightly below this order block. So this particular place, the stop loss here. Now I've highlighted this particular zone because I'm anticipating price to run above it. It is our zone of liquidity, equal highs. I'll talk about liquidity at a later video. So slightly above it, so that the market can purge above it slightly, so that you can offset our positions. Now let us continue. So the market dwindled a little bit. It was moving, retracing it. We were never tagged, but be patient. It's always a game of patience. So the stop loss should be slightly below the bullish order block. So the market is yet to reach to our entry. Now we are tagged into longs. So the market has reacted to a bullish order block. Then it has hit our target objective. Our objective has been cleared at this particular level. So basically this is the bullish order block, and at least you must have these characteristics that I've communicated in this video and the ones that I've delineated and highlighted for you to be able to choose your bullish order block correctly. It must be the lowest bearish candle that has the most range, and it should be suited or based near a support level to qualify as a bullish order block. And it should also be of significance in such a way that we anticipate price to run away from it with some sort of high momentum, and it should break structure. So ladies and gentlemen, this was a short preview. At least try to communicate about the bullish order block. If it has been insightful, consider giving it a thumbs up and subscribe.